Welcome back. We are still with earnings analysis, and Tata Power's third quarter profit is the one we are analyzing. Looks like it has disappointed the street largely because the company has earned less from its coal business. So not its core business. Core business has done better. The stock is down over 4%, but the company's core business, like I said, of power generation and especially distribution has done well. There is a lot of interest in its solar rooftops business after the government recently announced the Suryodaya scheme by which rooftops will be given to about 1 crore homes. So that may be more business. Joining me now for an update is Praveer Sinha, Managing Director and CEO of Tata Power. Good morning, Mr. Sinha. Thank you very much for your time. Well, first, let's come to the coal business itself. What's the in-house view? Is this coal price a passing thing? Do you expect to make more money in the current quarter from coal and the next?
Good morning, Lata. Thank you for having me on the show. First of all, I think this is the 17th consecutive quarter in which we have shown a growth in profit and EBITDA. The second thing is that this is a very satisfying quarter because our core businesses, which is our renewable and our transmission distribution and of course coal, have given more than 70% of our profit, which last year was only 40%. And we were more dependent on the coal profit, which last year, because of high prices, gave us a huge profit. But now that the coal prices have stabilized, we do not expect that sort of profit coming in. Of course, they will give profit, but not to the level that we had seen last year, which typically was a one-off and was not seen even prior to that. What is important is that notwithstanding the contribution from coal, all others have contributed. And today, not only this quarter profit has gone up, but if you see on an overall basis in last 3 quarters, we are at 3,000 crores, which you would be aware 3-4 years back, our annual profit used to be some 1,300-1,400 crores. So this is a hugely better performance and gives us a lot of satisfaction that going forward, how we will make this core business profit not only 70%, but enhance it to 80 and 90% in next 1 to 2 years.
We are on track. Yeah, Mr. Sinha, but you know, your stock has anticipated that profit. It was what, 200 rupees a year ago, now over 400 rupees. So the stock people expected and you delivered on that point. I'm not taking away from the profit growth, but that's already in the price. The market wants to know how much more. And that's why, my question to you. Let me come to the solar EPC business. You all are becoming much more a renewable company. According to your own targets, maybe 79% by the time you come to 27. So solar EPC business, you, I think if I remember right, said you are slowing down about a couple of years ago, but it's done well. Can you tell us what are your expectations in the entire solar unit, both manufacturing of modules and the EPC business? What are the plans?
So our renewable business is doing very good. And what we are seeing is that there is a huge support and traction from the market as well as from the government. As far as the manufacturing plant is concerned, the 4 gigawatt cell and 4 gigawatt module, we are very much on track. The module plant is already operational. It is started producing and will start supplying modules in this quarter to our large utility scale projects and some of the other EPC projects, where the domestic manufacturing of modules is required. We expect the cell plant to be ready in the first quarter of FY25, and it will stabilize by second quarter. So we are very much on track. And what is also good is that it could not have been a better timing, because with 1 crore rooftop solar, which will require DCR modules, we will be in a very good position to supply it to the rooftop business that is expected to come up in next few years. Secondly, on our utility scale, we have been implementing some projects. We went little slow last year because the prices of modules were very high when we were importing. The prices in last 6 months have come down, and you will see a huge amount of EPC projects and our own utility projects coming in the quarter 4, and also in the subsequent quarters in Q1 and Q2 of FY25. So capacity addition in quarter 4, we are expecting nearly 1.2 gigawatt, and similar numbers will happen in the subsequent quarters. So I think we are doing very good as far as our both utility scale and EPC business is concerned. And the decision to delay some of these projects in the earlier quarter has bore fruit to us in terms of getting a much better returns in the coming quarters. Coming to our rooftop, I think we are the market leaders with nearly 18% market share. And with more and more support that is coming from the government side in rooftop, we will continue to have leadership, but also have huge volume that will happen. So our renewable business, you will see, will really take off in a very big way in the next 12 to 18 months. Many of the challenges that we have overcome them with a safe supply chain from our own manufacturing plant. We'll be able to cater to our own requirement of utility scale, as well as sell some of the modules within the country or outside the country, and thereby improve the margins of these businesses.
Okay. Well, let me take one by one the things that you said. The module volumes, when it's at the moment, what, 2 gigawatts? When and how much do you see it ramp up to?
So already we are producing 3 gigawatt of modules, and within the next few weeks we will have. We are producing 3 gigawatt right now, and in next 3 weeks we will reach our full capacity of 4 gigawatt. Similarly, our cell capacity will start producing in first quarter. And by end of second quarter of next financial year, it will be producing at full 4 gigawatt capacity.
Okay. You had said that you would go a bit slow on the solar EPC, but it's giving you good returns. Will you be able to improve the margins, and what are the plans? Ramp up or remain steady on EPC?
So we earlier used to do more of third-party EPC and less of our own utility scale. Now that we have ramped up the capacity of our own utility scale and group captive, we will do less of third-party EPC. So earlier, which used to be about 50-50 outside and our own, we will now possibly have 70% of our own and 30% outside. So that's where we will ensure that our margins are better and we have a much better control on the supply chain.
Okay. Any chance that you may be able to sign something for Mundra as well? It is still under Section 11, like no profit, no loss. But is there any hope at all that you will be able to reach a longer-term PPA and it might turn out to be out of Section 11 and a profit-making company?
Absolutely. And one thing is certain is that Mundra is a very important component in supply of power to the 5 procurers. And in their merit order, they find that Mundra tariffs continues to be very, very competitive and low compared to alternates, which they buy at a higher price. Having said that, they are also very keen that this should be settled in such a way that it's fair to both sides. And to that extent, we have been in discussion with them. Now that the Section 11 is there, they want that within this period of Section 11, they come and have a mutual discussion, whereby we come to an understanding which is fair and reasonable to both sides. And I'm very confident that it will happen, because this plant is required by all the procurers, and this power will definitely support them in meeting their obligations.
All the 5 states?
Yes, absolutely.
Okay. A quick word on this PM Suryodaya Yojana. I mean, we'll have to call you on that separately because it's a huge thing. But were you in when the scheme was being drawn? We don't have much except some 10,000 crore that has been assigned to it in the budget under the Renewable Ministry. Can you tell us when it takes off And will we see some benefit for you in FY25 itself?
We were, of course, the discussion took place, and I think stakeholder discussion was done actively for last few months, so that whatever challenges which has been faced earlier in the penetration of rooftop solar are addressed comprehensively. And I think we'll see more of the details coming up, but there would be definitely little more of subsidy and the financing support which will be provided. And also how the discoms will support the consumers in doing the bi-directional metering. So I think this has come at a very right time. And when the prices have come down, also the manufacturing capacity has come within the country. We'll be able to cater to a large number of people in terms of providing this rooftop solution. For us, this is a very big opportunity because we are already very big in terms of rooftop. We are in nearly 400 cities with 500 channel partners. And we will further enhance it to meet the opportunity which the government is presenting. We will play a very, very important role with nearly 18% market share. I think we will only increase in the coming years.
Okay. So there's lots more to discuss with you on distribution and EV, but all that for another day. Out of time today. Thank you very much indeed for joining us with a good perspective on how the renewable business and the Mudra business will progress. We have to wrap up on Bazaar on a slightly negative note. The market is